Hello. Thanks very much for joining us for the first in a few months of our webinars. The reason we've restarted the webinars is simply because the government has restarted giving us information at short notice on how much tax we're going to have to pay and how much support they're going to give us. So I'm going to load up. Here we go. So our plan for today is to talk through the grants that are available to businesses for employees, to talk through the grants that will be available to self-employed people, to talk about the flexibility that's being brought in for the loans that people have taken out this year. Next up, we're going to talk about tax cuts. That's going to be exciting. I'm not going to tell you what they are yet. It's a little thing to look forward to. Spoilers, they won't apply to most of you. Then we'll talk about deferring tax payments. After that, we're going to have a little Q&A session. I've got some new ideas on how to run that, so if you hang with me till the end, then we'll see whether some of that works. I'm pretty much running this show alone today, and so if you've got questions, I'll try and pick them up. Hello, someone's saying hello, so hello. Let's start with some ground rules, shall we? First of all, please ask questions as we go. We'll try and pick them up. And also, oh, hey, do you know what? I've just had a thought. I'm in the office with a colleague of mine, Alex, and I might be able to get Alex to jump onto the Teams session. And if you join the event, you can pick up any questions that are there, and you can ask the rest of the team as we go to gather some answers. So ask your questions, Alex will have a look at them, get some answers, get those answers to me. We can't hear you, so you've got to type the questions. We're going to do a recording of this, as long as I don't mess it up too badly, and put it on YouTube. So if you don't want your name used, then please don't use your name. And the presentation is a summary of the issues. It shouldn't be seen as advice for you specifically. If you'd like specific advice, do get in touch with our team. Let's crack on. So, employee grants. The first thing I want to tell you about is the furlough scheme. The furlough scheme, i.e. the old one, the one that's coming to end at the end of October. This is for this month. It's 60% of the pay for employees who cannot work for the time that they are not working, because you can have people on this part-time flexible furlough now. You can put people onto this during October, so long as they were furloughed at some point in the past before we moved into the flexible furlough period. I think that started 1st of August. So if they were on furlough at any point up until 31st of July, they're eligible now for this new furlough. The employee must receive 80% even though you are only getting 60% from the government. So watch out for that. But that comes to an end at the end of October, and the new schemes don't start until the 1st of November. So if you want to put someone, if someone's unable to work and you want some support with paying them, this is the scheme that's available for the next month. Before jumping into the new scheme, I've got a slide here on the job retention bonus. The job retention bonus was announced months ago. I can't remember which month it was, but over the summer it was announced that anyone who keeps someone who has been on furlough, if they keep them until 31st of January, then in February they are eligible for a £1,000 grant, and that is a grant for the employer. Although my team have been saying that that should be shared with the employees. We'll see. We'll have that bun fight over the Christmas party, if we're allowed a Christmas party. The employee must, in order for you to qualify, must be earning an average of £520 a month between November and January. So I had someone who said, I've got someone who we need to reduce their hours massively through circumstance not connected to coronavirus, but we're going to keep them on, but they can only do, say, this amount per week, and it would work out that they were getting, say, only £300. They were just going to keep a little bit of work, but they couldn't do any more. Will I be eligible for the job retention bonus of £1,000? And the answer is no, because they're only going to be earning a couple of £100 a month in between November and January. They will not qualify for the bonus in February. The intention is this is to reward people who keep people on at a good rate of pay. So now let's talk about the new scheme. The new scheme starts from the 1st of November. It will run for 6 months, and it's as confusing as you like, not least because the rules are confusing, but secondly because the government's made it sound so much better than maybe it actually is. It's open to any small and medium-sized entity, so that could be a company or a self-employed person. Large businesses will be required to demonstrate that they are actually struggling because of coronavirus. And they will also have to, they won't have to, but they're expected to not make payments such as dividends to the owners of the business. This is large companies. We're talking about the national companies, and certainly no one who we are working with. We're talking about the very big. But let's be honest, those are the businesses who over the last 6 months have come under pressure to repay their coronavirus job retention scheme loans anyway. And so this will be impacting the biggest of the biggest employers and not the small and medium-sized entities. What's available to you? Oh no, there's some more rules to talk through. Employees must be on an employer's payroll before 23rd of September, which is the date of the announcement. So if the employee was not already on your payroll, to be clear, that means on a PAYE submission that has been submitted to HMRC before the 23rd of September. In reality, if you pay on the last day of the month, that means they must have been employed at the 31st of August. Because in between 31st of August and the 23rd of September, it's very unlikely you will have made another tax return, which is called an RTI submission to HMRC. So let's reread that as employees must be on an employer's payroll on or before 23rd of September, unless you're paid monthly, in which case it's 31st of August. We do have some employers, and I know that a couple of them were due to join us today, so I hope you're there, hello if you are, who pay on the 5th. And if you pay on the 5th, then it's the same rule. So they must have been on the tax return before the 5th. Before the 23rd, whether it's the 31st of August, whether it's the 5th of September. If you pay weekly or if you pay 4 weekly, it's before 23rd of September. So if you've had a new starter start in September, they will not be eligible for this scheme as it stands at the moment. We did see with the job retention scheme a very similar condition brought in, and then about 3 weeks later, that was extended. That was extended to cover anyone who was paid during March, and I think it was somewhere around the 10th to the 20th of April that they changed the conditions so that anyone employed in that last week was eligible. Therefore, my recommendation, as it would always be, is to make sure your tax returns are absolutely up to date. And that will be the case throughout this presentation. If your tax returns are up to date, it reduces the risk of you missing out on a scheme if it becomes available. So even for those new starters, make sure that every detail is filled in and the RTI is submitted on time to ensure that they receive the pay that they are entitled to. I am just going to have a quick look, see if there's any questions. No questions so far. Do ask if you've got them. You've probably read the rest of the slide as I go on about point number 1, but point number 2, the employee must work at least 33% of the usual hours for the first 3 months. The government is saying that these must be viable jobs, so they want you to at least show some indication that you need this employee to hang around. After 3 months, there's a suspicion that that will increase from 33% to needing to pay them more, but it's also possible that things get worse in the next 3 months. Here's hoping it doesn't, but if it does, maybe that 33% will reduce. What we know is that for November, December, January, at the moment, employees must work 33% of the usual hours to apply, to be eligible. Here's a good one. Employees will be able to cycle on and off of the scheme and do not have to be working the same pattern each month. But each short-time working arrangement must be at least for 7 days. So this means that an employee can go onto this scheme and you will be eligible for a grant payment, and then they can come off the scheme again. I think for Wendy's sanity in our payroll department, we prefer that you didn't do this too much, but it's a case of what the business needs, right? So if you need someone who is on this scheme to come back full time, that's fine, so long as they've been off for 7 days, and when you put them back on, they stay off for 7 days, or reduced hours, excuse me, rather than completely off, then you would apply and you'd be able to get this grant payment. So what do you get? The grant will cover hours not worked. So let's take our employee and say that they have worked 1/3 of their hours, 33%, and not worked 2/3. The government will pay 1/3 of the hours not worked. Does that make sense? I hope so. We've got an example here, and I'm going to read it out to you, and maybe by the end of this it'll be more clear, and if not, I've got a couple of bullet points that maybe will make it more clear again. Beth normally works 5 days a week and earns £350 for the pleasure. Her company is suffering reduced sales due to coronavirus. That's important, you need to be adversely affected. Rather than making Beth redundant, the company puts her onto the job support scheme, working 2 days a week, 40% of her usual hours. So she's working at least 1/3 of her usual hours. Her employer pays Beth £140 for the days she works. Good, because that's the full rate that she was contracted to earn for the hours that she's working. For the time she's not working, 3 days or 60%, i.e. £210 is the amount she's missing out on by not working those hours, she will also earn 2/3 or £140, bringing her total earnings to 280. But of that second 140, see if I can get my mouse to hover over it, this second 140, the government will only be paying 1/3 of it. The employer is expected to pay the other 1/3 of it. Did anyone watch Rishi's speech on Tuesday? It was Tuesday, Wednesday last week. Anyone watch that? Didn't he make it sound like he was going to give us 2/3 of an employee's pay so long as they weren't working? Well, no, he isn't. It did sound like that, but I'm not sure whether you've noticed his announcements, but they all sound quite rosy. And then when you look at the detail behind them, it's been dressed up in a way that sounds as good as it possibly can. And the reality sometimes is a lot more conditions and isn't quite as generous. If an employee works 33% of normal hours, for example, 1/3 of their normal hours, the government will pay 22% of their normal pay. The employer must pay in full for the time they work and must pay 1/3 for the time they don't work. And the government will pay 22%. If an employee works 70% of the normal hours, the government will pay 10%. And yet, by some kind of magic, he made it sound like he was going to pay 2/3 of their pay. Well done him, that's a skill. So, yeah, excuse me. So what's my point here? So if you have employees, you can get some payment towards them from the government. You must be paying out of the company or the business's pocket an equal amount as the government for the time not worked. So you're putting a bit of commitment into saying that you need this person to return or that you want to keep them on your books. And it's a little bit of support whilst you're unable to give them work due to coronavirus. We have not yet heard whether it will apply to directors as well as employees, although previous schemes have certainly been open to them. At this point, we don't know. It's only due to come out, or the first claim will be possible, presumably towards the end of November, because it's for hours worked from the 1st of November. So we've got plenty of time for the government to issue further guidance on how the scheme will work. My guess is they're holding off to see how the press takes it and how the business organisations come to them and say, well, wouldn't it be better if this and wouldn't it be better if that? And then the government says, oh yes, well, that was always part of the rules, it's just we haven't released the rules yet. And then we'll get this final document, which is how it will work, based on our contributions, let's call them, from our lovely media. This is my cynical guess. And so we'll see details like that. My guess is that directors will be able to use this scheme. However, I don't know a director who has ever worked 1/3 of their hours, or started to stop the stopwatch. I mean, certainly as a director, I've got weeks where I work maybe 200% of my hours and weeks where I don't turn up as much as I should. If you asked my team what my normal hours are, they'd probably give you a different answer to if you asked me. How are they going to monitor that? But wouldn't it be unfair if they don't include directors? At this point, we don't know what they're going to do. Once we do know, I will update you, and at the end of this, I'll tell you how we update you. No secrets, it's our website and it's Twitter. I'm sure Rishi will let us know as well. So that's the job retention scheme. I'm just going to have a quick check for questions. Anything coming in, Alex? Brilliant, no questions, but a few comments. Thank you for those. We'll move on to what the self-employed get, because it's not all about companies. Self-employed are going to be eligible for 2 more grant payments, which is fantastic news, isn't it? Wait, there's more good news, sort of, or bad news. These grants are only available to people who have already been able to apply for the Self-Employment Income Support Scheme grants. So these are the quarterly payouts to self-employed people, i.e. not company directors, but people who are self-employed and fill out the self-employment pages of their tax return. And these grants were paying a percentage of the average monthly profits to self-employed people. And if you were receiving these before, you were able to make 2 further applications. Those applications will be in November and February. However, instead of the very generous, or not generous as it turned out for so many people, grants previously, this one is going to be for 20% of average profits. So if you've had a bad year at any point in the last 3 years, or if you were frustrated with the amount you received in grant payments before because of something that felt unfair, I'm afraid it's only going to get worse at this point. This payout will be 20%. For a lot of people, that's not going to be a great deal of money or a great deal of help. I'm just going back a slide to just point out this final point. Everything we're being told is that the government will base payments on exactly the same conditions as before and exactly the same calculations as before. But we have also known the government to change their mind about things. And I cannot stress enough that if you've had a good year on your tax return 1920 and not yet submitted that to HMRC, now is the time to do it, just in case they change the eligibility or calculation criteria, just in case they give an opportunity for people who had a bad year 3 years ago but a good year last year to improve the amount that they can receive. They are coming under a lot of pressure to make this scheme better, and then they give us 20%. I hope they give us better, but I don't think they will. Again, get your tax returns up to date. It can only help you. I suppose unless you had a loss-making year, if you had a horrible loss-making year in 1920, the year ending March 2020, you might want to talk to us before you submit your return, but certainly our advice is always get your tax return done nice and early if possible. I don't think that's changed. Loan flexibility. I've got a couple of slides now on loan flexibility. I'm conscious I don't want to run over. I think I'm doing okay. I think we'll be done for 11:30 unless you come up with a load of questions. There's an extension. Any coronavirus loan schemes are now extended until 31st of November for applications. And a quick point here, which is that the first loan scheme, not the bounce back loans, but the coronavirus business interruption loans can now be extended to 10 years. Bounce back loans are more interesting, so I've got a slide on that. Bounce back loans. There is an option to repay bounce back loans over 10 years. This, according to Rishi, reduces payments by almost half. So anything that you thought you had to pay back over 6 years, you now have 10 years to repay. In addition, you will be able to apply for a 6-month interest, think I've written this wrong. This should say 6 months interest only period, and you can do that up to 3 times. And a 6-month payment holiday, which you can do once. You can only do your 6-month repayment holiday after you've made 6 successful repayments. So what's going on here is the government feels it's entirely likely that people will not pay back their bounce back loans. And I think they're worried that the repayment rate will be so low that they are trying to make it easier for you to start making repayments, make it less painful to repay. My understanding is that all of these are opt-in, and since no one is making any repayments yet, I doubt it will be soon that we hear the mechanism for opting into these, but presumably it will be by speaking to your bank. And if the banks are smart, they'll be planning some kind of button on their website that makes it very easy for you to do this. So that's the bounce back loans, and this changes the, certainly for the few conversations I've been having with clients since this announcement, this changes their planning and how they fear or how they feel about making investment decisions now with the money that they still have from the bounce back loans, knowing that they've got twice as long, almost twice, well, to repay it. Tax cuts. Here you are, you're waiting for this one. It doesn't apply to you, probably. This is the well, it does if you go out to eat. The 5% rate of VAT will stay in place until 31st of March 2021. It's my own little bit of Rishi spin because it's not even a cut, it's just staying the same. I'm sure he would call it a cut though. And it applies to very specific supplies for pubs and restaurants. So if you should know about it already if it applies to you, and it won't come to a surprise that this has happened. It probably won't impact the price of our meals. I hope not, because my personal hope is that everyone is keeping their prices the same and just enjoying that little bit extra income for themselves to help cover the additional cost of manning a restaurant that you can't sit as many covers as you'd like to in. So if that didn't apply to you, maybe this one will. VAT deferral. This is about repayment of VAT if you chose to take advantage of the extra time the government gave you to make your payment between March and May 2020. So if you had a VAT payment due then, you could choose to not pay until 31st of March 21. They've now extended that to 31st of March 2022. They have told us that if you're doing this, you have to make 11 equal payments over the year. So I'm not sure how exactly they're going to do 11 payments over 12 months, but this is what they've announced. And that to apply for this, you use the HMRC time to pay scheme. My guess is there'll be a better mechanism in place by March 20. Oh, well, then that's not true. March 2021. I expect they'll have a better mechanism than time to pay. I'll talk a bit more about the lovely people at time to pay in a minute. But this means if you have deferred a quarter's VAT, you've got an extra year to pay it, and you're able to spread it over 12 months. Self-assessment. Here's another one that you can spread over that year. We were due to make self-assessment personal tax payments by 31st of January. And because the government pushed out the payment on account in July 2020, people who pay money through self-assessment and are paying more than £1,000 have to pay a little bit, or half, in July and half in January. But the July payment was deferred until January. And now that whole amount can be deferred by another year to January 2022. This can only be done if your tax liability is less than £30,000. If it's more than that, we should probably talk individually anyway. It's not clear yet whether you will have to make these repayments by instalments. The government hasn't said, but looking at the VAT scheme, my guess is the idea is they want to take that big payment and cut it into manageable chunks over a period of time. And you will apply for this one using those lovely people at HMRC Time to Pay. So why do I call them lovely people? In fact, at the moment, that isn't me being sarcastic, nor is this. They have been overwhelmed they have increased the resource to HMRC's time to pay service as a result of that, so that they can quickly get through a large volume of calls from people who say, I haven't got money to pay and it's due to coronavirus. And over the last 6 months, we've seen this service go, hello, oh yeah, John, right, let me take your details. We're going to give you an automatic 3-month extension, see if you can get it sorted, and if you can't, call us back. Because they just needed to get people off the phones, basically. So they were giving everyone an extension just to get the phone lines clear and spread those calls out a bit more. I believe that they will be using this time at HMRC to build a more electronic, a more internet-based solution to time to pay, so that they can ask you questions online and agree payment plans and set up direct debits for paying off these old tax debts. They haven't announced this, but this is just my guess that by March we'll probably be seeing, or excuse me, maybe by January we'll be seeing some kind of online portal for HMRC time to pay. The only reason I think they might not do this is that HMRC time to pay in the past, because this has been around for just over 10 years, there have been periods of time where they were incredibly nasty to people who wouldn't or couldn't pay. I think they had to be, because there's certain people who would take advantage and almost expect they could use this service every 3 months, whereas really they should have been questioning the viability of their business. And so they had to be very, that they were chasing debts. They were chasing debts, and even though you'd volunteered that you couldn't pay, it wasn't an automatic kind of gift that they would give you extensions and extra time. So this makes me think maybe they'll keep it to telephones, because on a telephone someone can get nasty with you and say, no, you've taken money and spent it on something you shouldn't have. You've essentially stolen from us. You should pay your taxes. It's harder to get that kind of emotional guilt trip from a website. So I don't know what they'll do, but I expect that after the new job scheme is up and running, they'll make some more announcements about how you can spread these tax payments out. With any other tax payments that are overdue, there aren't any more announcements on how you can spread them, but time to pay still exists. So if you're struggling with a tax payment, please consider talking to us and consider talking to HMRC time to pay. Tell them the situation, or tell us the situation, and make an agreement. It probably is worth talking to us first, because in some cases you need to be careful that you're making the right payments to the right people in the right order. These tend to be when you're running out of money. So if you're running out of money and you need time to pay your taxes, and you have a company, specifically if you have a company, well, I suppose anyone, give us a call. We'll put you in touch with the right person who can help you with working out what to pay and when. There's 2 parts to this slide. I'm going to start with the second. We've been making some changes to our website. We put a coronavirus feed on it. That sounds exciting, doesn't it? It has been for us, at least. It's been a project that's given me a bit of a buzz to just create a feed of, hopefully, no nonsense, small updates on anything that I think you guys need to know about coronavirus and how it impacts businesses. If you see anything that we're missing, give me a shout and I'll put an update up. We're trying to get these blasts out quickly, so as soon as an announcement is made, there's something on the website that gives you a pointer on it. I'd be grateful if you'd share it as well. If you see something there that's interesting, chuck it in a tweet, chuck it on Facebook or something, and pull people into this site. Obviously, there's some sales benefits from getting people on our website, but that's not the purpose of this. The purpose of this for me is to use the information we have as a team of accountants and business advisors and get that to you in the way that is the most helpful, the most kind, and reduces the stress on my team as much as possible. If you can imagine, every time there's an announcement, there's maybe 100, 200 people who want to know what it means for them. I need mechanisms to get that out there quickly to everybody. And so this is the way I'm looking to do it. So it's there to be kind on my team, to reduce the burden in a difficult time, and also to help you guys get what you need as quickly as possible. So please use it and please share it. If you can think of anything we're missing or anything that would make it better, let us know. We've kind of hacked it to the market. We haven't spent a long time polishing it. The project started this time last week and it's now on the website. previous edits to the website took about 2 years to come to fruition. Should we spot anything that could be improved? I'd love to know. Please tell me. Now, I've had an idea, and I don't know whether this is going to work or not, but I would like to chat to anyone who wants to chat to us about these announcements. The thing with the Teams Live event, which is what this is that I can't get you guys on the screen, but I'd like to open it up now, an invitation to you that if you'd like to discuss this with me or anyone else on the team, because I can call them and get them all in, give us your email address, say hello in the Q&A. And we will we'll have a call and answer any specific questions you've got, discuss the impact for you, and maybe just have a coffee or a drink and chat about how things are going. After this, my intention is to, if it works, to build that up into something that we offer more regularly, just to allow business owners to catch up with each other and share their thoughts on what's going on. If it's of interest, then let me know. Thanks to those who already have put email addresses in, that's super. Anyone who wants to talk to us, let me know. That's it. That's what I said I was going to talk about, and that's what I've talked about. We've got the employee grants. We've then got a small grant coming out for the self-employed. If you've got a loan, they really want you to pay them back, so they're going to reduce the payments to about half. The hospitality sector is probably going to get a bit more support than the rest of us. And any tax payments you're struggling with, please contact me. Please let us know. And that is what we've got. Oh, hello. Query over a new starter qualifying for furlough. It depends on the date. If they were on your payroll, and this query's come in from someone who runs their payroll on the 5th, if they're on the payroll at the 5th, they'll qualify for the scheme in November. They will not qualify for furlough because furlough is for periods. They had to be on the payroll back in March in order to qualify for furlough, but they might apply for the new scheme. They might apply for the new scheme so long as they were on your last payroll submission to be made before 23rd of September. Hope that helps. Give me a thumbs up if it does. That'd be awesome. Anyone else want to join us for a quick chat, please? Oh, hello. I've got a hello from Anonymous. Hello. It'll get a bit tedious if I just say hello to everyone now. So please drop me your email address and we'll have a chat. I'd really like to chat to you guys. But in terms of content, I'm going to make myself full screen again. Thank you very much for coming. Thank you very much for showing me your support by coming along. It really does make it easier to help you if we can do it in these group sessions rather than one-on-one. Do come to us if you need specific advice. But even better, ask us some questions. Let's see. Oh, hello. Oh, what do employers need to do? Read the £1,000 bonus in January for retaining staff that were furloughed. There'll be a portal available, probably part of the existing portal, that will be opened in February, and you just need to keep the employee on your books. They know that the HMRC know their names already, so it is just a case of keeping them on the books, and then in February we'll make a submission. I'm sure we'll be offering to do that on your behalf to get these £1,000 grants in. Okay, thank you for those who said they'll come along to a call afterwards. I'm going to cut us short now, and anything you can think of that you think we should be doing to help you, please let me know. It would be really useful to get your feedback on this, and it would be really useful if you do something to pull more people into that coronavirus feed, because the more I can help people, the happier I'll be, basically. Thanks very much, and see you again soon.